The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
Good afternoon, traders. Boy, is it a beautiful day, and it is Wednesday, March 14th. I keep on forgetting to change the day on my slides here, but it is Wednesday, March 14th. Einstein's birthday, 143 years ago. One of the smartest guys ever. He pretty much amazed us all, and there hasn't been a gentleman like him. Actually, he is in circles for people writing computer algorithms, kind of the patron saint of high-frequency trading. A lot of the work he did early on with Brownian motion is the core of a lot of work now done on Wall Street for those high-frequency traders. He proved, without being able to see it, the existence of atoms. Kind of like we do in stock trading. We have to infer a lot of things because we can't actually see them. But much like little atoms pushing little, what were they? Little pollen. His whole thing, and won a Nobel Prize for, was putting little flecks of pollen in dishes and watching them being pushed around. He'd heat up one area of the water and it'd push the pollen somewhere else, and he could infer from that by adding heat, the electrons actually moved more vigorously in one part or the other, and was long before they could have scanning electron microscopes that could see an atom, proved the existence of atoms. And then went on from there to prove that photons were actually particles and some other stuff. But a lot of his early work is still finding its way into stock trading today. His brilliance was really that he could visualize something first and then work on the math later. He could understand the problem, like the speed of light, and figure out that if he was on two trains, both of them going at the speed of light at each other, and light could only go the speed of light, something else had to give, and that was time. And he came up with his theory of relativity, or general relativity, and pretty much within a very short amount of time, about 10 years, became the most important scientist probably just about ever, I guess. He still is the gold standard as of a scientist, and still helping us in stock trading today by learning to infer things and think about the problems visually before we get into the math of them actually working. Much like charts visualize what's really going on underneath there, those atoms of buyers and sellers hitting those pieces of pollen, which are price, and moving it up and down. On my radar today, June is the end of Operation Twist. We need to start thinking about that. The market tends to look forward about 6 months to 9 months generally as to economic conditions, and we're probably getting fairly close to that right now. So we probably, if it actually did have a bearing on the markets, probably start looking at that inference starting to come off, the qualitative easing that the Fed likes to talk about. Rare earths and WTO, the World Trade Organization, we've seen a couple of companies like Molycorp bounce up and down. Molycorp had a real nice little move when they bought a Canadian manufacturer of rare earths earlier this, Monday or Tuesday? Probably Monday now. But a lot of this World Trade Organization thing, a lot of fluff and thunder. Don't expect too much to come from it. China is going to keep production of rare earths as much as they can in China to continue the companies in China doing well. They're never going to send enough out of China to let other companies truly compete. on the unrefined version of rare earths. So continue to see companies like MCP, Molycorp run up and down. I suspect that it's really coming back down a little bit farther, and maybe 4 or 6 months, something like that. I may see it where you can actually buy it for a very, very long-term hold. Overnight, I think most people kind of ignored Shanghai. It was off 2.5 or 2.6%. One of the big Chinese guys that's a little less kind of a communist warned about a housing bubble, and that's all it took. Apparently, from the announcement or the discussion of the housing bubble to the stock market tanking over there was almost instantaneous. So most people are putting a cause and effect into that. One of the other things that came out fairly close to the same time, though, is one of the Chinese leaders who's vying for power over there. He's a real China Mao's little red book kind of commie. Little old commie, he came along and started stirring the pot pretty much at the same time about how they really need to go back to the last cultural revolution where they shoved everybody out into the fields and beat them to basically make rice all day long. Everybody didn't want anybody too smart. If you were an intellectual, you probably got killed or sent to re-education camps. There are still some of those people around, just like Russia, still have some of those KGB types, Cold War types, true commies out there. And there's a little bit of worry. I think Art Cashin put out a piece today on it, but there's still kind of a little worry. He's saying that the potential for a real power struggle in a nuclear company in a nuclear country like China does have a possibility, and is probably not factored in the prices of the stock market over there, and that the housing bubble was part of it, but also part of it was this China power struggle that's going on now. As we check into the markets every day, normally, I like to look at it, but before the end of the day, I did want to say that we do have, from very strong volume today, 3.5 billion shares already, means that we're probably going to come along with, I'm going to say 4.6, 4.7 billion shares today, which is actually fairly decent. That we are not going higher in the broad markets. Let me see what we've got right now. Off 4 kind of makes me think that yesterday was a little bit of an aberration based on tricks in the market. We're going to get to that here in just a second. After the bell, Eagle bulk shippers. I know Tom O'Brien in his show has been talking a lot about bulk shippers. Probably going to get a fairly decent look at them after the bell, EGLE and VGZ Vista Gold. I wanted to kind of give just a little bit of an opinion piece here because it kind of wraps up into all the things I'm talking about here today. And that one is a parable that comes back from 300 AD. It comes from a book of about 100 stories, short stories from India. And it's the scorpion and the frog. In the parable, the scorpion comes along a frog at a riverbank and asks him to cross the river if he could ride on his back. And the frog is afraid of being stung during the trip. But the scorpion argues that if he's stung, the frog would sink and the scorpion would drown too. So the scorpion's not going to sting him. The frog agrees and begins to carry the scorpion. About midway across the river, though, the scorpion does indeed sting the frog, dooming them both. They start to sink. As they sink, the frog asks the scorpion why, and he says, it's in my nature. And the basic fable on this is that kind of people are what they are. They're going to be exactly what they want to be. If you're watching Tiger TV, here's the actual picture. It was actually a turtle and a scorpion in the original story. But there's actually a kind of a neat picture that goes back to 300 AD on the scorpion. But yesterday, J.P. Morgan jumped the gun and dumped out early that they were boosting their upgrading their buyback, and also the the amount of money that they're going to get back on their shares. The purpose of Wall Street is to push paper, not to make you rich. Their job is, they're not Mother Teresa or anything else. There's only two people I know that have never been hypocrites on money, and that's one was Mother Teresa. The other one I know is Neil Young. He's given away 80% of his money every single year for 35 years. Everybody else, they kind of come and go. I know it's a little tough, but there's not very many people out there that are not driven by money somewhat. And when someone tells you it's not about money, it's about money. It's almost always about money. It's kind of the scorpion and the frog here with the Bernanke and the Fed setting up J.P. Morgan to drop their information early. You could see it during the day that they were actually buying. Someone was buying a huge amount of at-the-money calls with just 3 or 4 days to go. And was setting up something, and of course they dropped the information at about 3 o'clock yesterday about upgrading their dividends, and ran the market here at the end. Normally that's a fairly decent sign that you've probably hit in some kind of short volume, short time at least, or up to a median time top. This was well organized. It was organized to run the shorts. It was also organized to run the maximum amount of money out of call positions that were out at the money. Most of those were either sold by the end of yesterday or sold in the first hour of this morning's trading. And after that, we kind of faded off. We continue to fade off a little bit. But I'm suspecting that we are now in a trading range. The problem with the Fed is that they suspected that Jamie Dimon at J.P. Morgan wasn't a scorpion. These people, all of them, wake up with one thing in the morning, and that is not to cure cancer or to help you make money, but for them to make money. I know in a kind of a tangential article today, one of the gentlemen at Goldman Sachs quit and said that basically they woke up every day trying to screw their customers, and internally they called their customers Muppets. That they were just like little puppets, but maybe a little furrier, and you had to be a little bit nicer to them. But the guy's kind of, I think maybe it got a lot bigger than he thought it would, because he's apparently ducking all kinds of requests for interviews today. But these guys are not out there being real nice guys. Do I totally believe that J.P. Morgan set this whole thing up and was lying about not knowing the Fed said that they couldn't release this information out early? No. They knew exactly what they were doing. They set it all up. I'm pretty confident, but cannot prove, that they were probably buying at-the-money calls all day yesterday morning, decided to pop this thing out and make a huge cash load all in one day. When we come back, we'll be picking up a little bit more news out here. But Wall Street is the scorpion, guys.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back, we're going to get to blow-off tops and the characteristics of them. But we do have a caller, and it's Robert from Chicago. Appreciate your call, Robert. How you doing today?
Oh, very good. I'm in Chicago, and it's incredibly beautiful here.
It's another gorgeous day in Clearwater, of course, and all the tourists are here. What would you like to talk about today?
AMD.
And what's your question? You have you're looking at what kind of a top here today, or?
Yeah, I'm long AMD around 650. I'd like to stay long, and I was wondering what's your view on AMD?
I was actually long AMD in my Tech Insider newsletter, and the one thing I really disliked about them was that they weren't able to get their technology out at 22 nanometer to compete with the next generation of Intel. They actually had TSMC, I think is the fab company, and they had like 10 or 15% of them, and they couldn't, they owned a part of a fab company, and they couldn't get the fab company to actually generate their chips for them. And even Intel now is selling some of their space in their fab for their 22 nanometer technology to other companies. And that's the one thing I disliked, was that that there's only a few people able to use that kind of cutting-edge technology, and basically AMD's kind of trapped at about 32 or 28, depending on which fab that they're using out there. The whole point of smaller putting all the traces closer and closer in a processor is they use a whole lot less power. And everything that we look at now today with portable laptops and everything else is all about power consumption. They've got some other nice stuff. I just don't think I'm always looking for companies in that Tech Insider that can do 500%. And when I found out that they couldn't control their own destiny in manufacturing, I couldn't hold them anymore.
Okay.
So was it still a great short-term trade? Yeah. Is it a great long-term trade? I don't think so. And I think it's just that. Whether they can design the chip doesn't matter. They have to be able to build it. They have to be able to build it smaller. And there aren't a lot of companies. AMD actually changed their manufacturer. But they don't have the technical capability to produce their own chip themselves. They had to go to somewhere else. They had to pay more money. Is it still a good company, and could it go back up to $10? Yes. I'm pretty sure that what we have here today is a very, probably a medium-term top. This thing's probably going to come back down to the $7.20 level, in my opinion. It's probably a pretty good indication. And at that level, we're going to find out whether or not it wants to go back down to $6.75. But that's just the problem. I know that a lot of this rally here over the last 2-3 days has been speculation that they're going to be able to sell their processor to Apple. And the question is, especially with Apple, it's all about power consumption. And I just can't see where, since they can't make that 22 nanometer technology, how they're ever going to be able to compete with Intel on the tablet business and some of the new products. But I mean, that's the problem with these guys. Is even if the processor was the same thing, it's all about power consumption. And these guys especially Intel's really pushing these, what's the term they're calling them? The real thin laptops. I'll think about it here in a second. Ultrabooks.
Okay. Is
what they're calling them. And it's got to meet a certain spec and everything. Not a big deal, but the big thing that Intel, and the reason that they're pushing that, is that AMD can't come anywhere close. It's a great processor for a desktop, but because they can't continually shrink the size of the die that the chip goes on, there's no way they're ever going to get close with the power consumption of Intel. So it's always going to be a less expensive product. They had a window of opportunity, and it failed when they couldn't get a company that they owned a part of to adequately make the chips themselves. So are they an okay company? Yeah. Could they see $10 again? Yeah. Are they going to see 20 or 30? Nah. Unless something drastically changes. Let me put it that way. I don't think they're going to be able to get Intel to make the chips for them. But I mean, even I think Apple is looking at farming their production of their ARM design back to Intel at 22 nanometers so that they can get the same kind of thing. Intel kind of doesn't want to do it because they want to push them to their processor or their processor design. So I don't know how that's ever going to come out, but the whole point is make it smaller, smaller, smaller. Every time you make it smaller, it uses less power. And that's the whole battle out there. Technically, you want to hang on through the break?
Sure.
Okay. We'll be right back. We'll talk a little bit more about AMD, and then we're going to get into what blow-off tops really are like.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in the complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2 week free test drive right here, right now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
As we come back, we're talking with Robert in Chicago about AMD. You can always give me a call at 877-927-6648. Still there, Robert?
I am. Thanks, David.
Okay. You know, you pretty much broke through, didn't have the volume I think that you really needed. You had February 17th high at $7.68, 15 million shares. You had 19 million shares at 770. You blew through this. If you close below 770, this thing's going probably to the bottom of that trading range that had about 5 days. That went sideways. What is that? 224 through February 24th through March 2nd. So you're probably looking just at that heavy down day. So I'm thinking $7.10, something like that, and then you're going to find out whether you go to $6.76 on it. But I think it gives me every indication that this thing's topped out here. That being said, and that AMD is probably going to be the second best chip manufacturer. They probably are not. I'm not thinking they go back down to the bottom of $4 or $4.50. I think they will continue to be the second tier player. The difference is Intel is making 65% margins on their chips. AMD's making 45% margins on their chips. So the problem is no one wants to get too far into AMD. If this thing could ever get back over $10, then a lot of the funds could start buying them. and maybe this thing could really get rocking. But the problem is it never really gets that close before everybody doesn't pound back on the thing. So, maybe things change, but I'm going to say that this would be a stock that looks like it would run, depending on the broad market. You've got October, probably about 15th for a launch day for Windows 8. And
right.
I think there's going to be a huge market for Intel and all these guys. So I'm figuring that you're probably going to see this thing start a decent run into that upgrade cycle probably about 2 months before October. So look, I'm going to say this thing's probably going to be setting up for a nice run probably mid-August when everything's quiet and nobody's talking about much. That's going to be the time fundamentally to be looking at it. Technically, depends on what the broad market's doing. But I'm thinking that this thing's going to probably wind up a couple of months before Windows 8 comes out. I've got a copy of Windows 8. In fact, you as a customer can actually download one and start playing with it.
Wow.
It is very, very, very good. The consumer version of that, the preview is out. They've already changed a few things on the developer versions of it. But it's going to be very sweet. Now, you're going to need a new monitor, that actually a touch monitor, to go with it in your house if you want to act like it's a tablet device. But it gives you kind of the best of both worlds. If you're familiar with the old Windows operating system from Windows 7, there's a way you can use it like that, and then you can also use it like a tablet. So I think it's really good. I think the fervor in tablet business is going to be awful tough with AMD still sucking the amount of power they do. So I think this is a play on desktop upgrades, because I think they've got the best value proposition right there with their 3650 APU product is still the best. And you still, if you go into Best Buy, you still see, 3/4 of the machines with those in them right now, at least in the area I'm at, because they are the best value proposition. Also, you've got the hard drive shortage pretty much going to be over by the end of the summer. So I think you have a lot of things that are just lining up here perfectly for this thing for maybe a nice run into next fall in that part. But I suspect between now and then, we're going to have kind of a little bit of pullback here. That's going to tell us a lot more. But I'm going to say 710, something like that, and then you're going to find out whether you get 680 out of it.
Sounds good. Thank you, David.
You bet.
All right.
Thanks for the call, Robert. And again, anybody wants to call, you can always give me a ring at 877-927-6648. I was going to go back to a few of the things that I was talking about. One was blow off top. I know a lot of people have been talking about that. If you are watching on Tiger TV in the Den, hopefully you can see this fairly well. It should look okay in Tiger TV. A blow off top has 3 standard items that you want to check off on the check boxes when you really want to know that it was truly a blow off top. One is a dramatic increase in volume. I'm going to say we have a moderate increase in volume. A dramatic increase in price, certainly have that. Here's the last one, the failure to hold the highs of the day. And we've seen a couple of times where this thing has come up. It closed just a point under yesterday under the high. Today it's closing again back under that. And so we want to really, we're now starting to see this kind of volume come in. And if you can watch this chart, unfortunately I wasn't able to actually bring this up. You'll see that it opens a little higher the next day and then really sells off the rest of the day. Let me check real quick here for an update so we can look at our quotes here. So we're off $3. So that's a kind of you could almost check that off as a failure to hold the high. I suspect that this is much more of an issue with the semi blow off top. Let me put it that way. In setting up a trading range from this probably 1400 area back down to 1346, 1343, something like in that price range over the next month or so. And then if we're going to go much higher, I think we're going to have to come back up and on that point actually get a lot more volume. This is the most dangerous time to be trading, and that is after all the shorts have been blown out. The reason is they are the natural buyers, and without them sitting underneath there, the market can actually move extremely quickly on bad news. I think we have job numbers in the morning, some more economic data on Friday, but I suspect that we'll have kind of a modest pullback into Friday's expiration, something like, I would look at like 1375, something like that, maybe see 1346 early the mid part of next week, and how we come back on that volume is going to tell us whether or not we go once more up here and maybe try for 1425 on the S&P cash. But we've got 2 of the 3. We don't have 3 of the 3. If we had a huge smackdown tomorrow and let's say 5.5 billion shares, I would say it would look a lot more like the standard blow-off in the examples that you normally see in the book. The volume is increasing today, so we're getting part of it. Maybe we're not getting all of it in one day. Normally, a blow-off top happens almost intraday, and you know it by the end of the day. This would be a mild blow-off top if we do continue on that way. As we continue, kind of just an interesting thing. A gentleman in Alcoholics Anonymous was confessing some of the things about a buyout, and actually one of the guys he was in with AA decided to go ahead and invest in the stock. Kind of interesting that you'd be talking about a merger during your Alcoholic Anonymous confessional, but apparently he did, and one of the guys was actually a big wheel in the stock market and invested in it, made almost $300,000. I think he got arrested on Monday. So just remember, no matter where you hear it, if it's inside information, they will figure it out if you're not one of the big wheels on the street. If you're a little guy, they will find you and come get you. Don't trade on inside information. Also, one of the things that I found very interesting, the CBO doubled the Obamacare estimate to $1.8 trillion. That was from an original $875 billion. The May Supreme Court decision also is looming probably the 5th or 6th of May. If you are interested in investing in the healthcare sector, you still have these 2 things kind of hanging over your head. But my guess is that the premiums are going to be short by about half now that we know that the total CBO scoring on that probably comes up to what most of the critics said to begin with, which is it was way underfunded. And I guess part of it now is that if it's really scored under the 10-year plan, it's actually going to be about $2 trillion to actually implement the current law for what's now come to be known as Obamacare. Probably the biggest thing is that May Supreme Court decision. If the mandate is held to be lawful or unlawful, probably going to be a huge move in those healthcare providers then. One of the other things is Singa, I can't even say it today, Singa, the game company that revolves around playing things like Farmville on Facebook. I never got into it. I thought it was a cult. Just kidding about it. But it's they are planning a secondary now. Their unlock period comes up on May 29th. They have a lot of insiders that want to sell at least a portion of their sales. Right now, there's only 14% of the shares are available in the float to sell. Now, here comes the deal, and this is why I've warned everybody about just about every single IPO over the last year and a half. That is that they're doing sliver deals, that only a short amount of shares are tradable at any one time. This is not Google, where they were able to sell them all in a Dutch auction. This is the stock market and Wall Street in its pure glory, pushing out paper. Now, what they're going to do is do a secondary, and anybody who wants to sell can move their shares to the secondary. But the problem is that this infers that everybody, or at least some people, want to sell. Now, there's one thing that's buried in the original IPO documentation of about 320 pages, which I did skim through, and that is that there's one paragraph in there that says, in the sole discretion of the underwriters, who happen to be Goldman and Morgan Stanley, that any time they can sell. There is zero lockup for these 2 big powerhouses, and they have about 15%, I think, of the shares outstanding still. So these guys are going to make a little bit of gold mine, and apparently they found out that they can't actually dump their shares on May 29th. So what they're doing is setting up a secondary to sell to everybody else and whip up, chum the waters so that they can get enough furor about this going on so that they can dump their shares out without crushing the stock. What this tells me is that there is no appetite for the stock. They're going to develop it, and it's probably still going nowhere fast. But probably going to see that secondary here out before May 29th. But Zynga, probably a pretty decent company, does kind of make money, but their trajectory of growth has failed, and they're going to continue moving on. Not a bad company, but maybe not the best stock in the world. I suspect it's going to take a year or two for these shares to settle out and actually be a decent buy. This is the last print edition of the 32-volume 2010 edition of the Encyclopedia Britannica. I think everybody growing up remembers before the pre-internet days of actually going to look information up in the encyclopedia at the library, or maybe your parents actually bought you one of those when one of those men that actually sold them came to door and knocked on that door. Got to sell you some encyclopedias. I guess it was between that and the shoe salesman that was ridiculed the most on television. But after 244 years, the last edition of the Encyclopedia Britannica has been published, and probably gives you an idea that, for the most part, print is truly dead these days. Lastly, we're going to get into some stocks here. Dell has planned to acquire Sonic Wall. Some of you people that have traded for a while may remember Sonic Wall. They make technology to detect and protect network. They made little boxes that basically were like super firewalls. They sold a lot of them to the government and high-end businesses to keep literally everybody out. You had to be pretty much a guru to make it through it. Wasn't totally impregnable because, of course, then no one could get through, even the people that wanted to. But Dell, this is about the 19th acquisition that they've made over the last 2 years. I don't know if he's ever going to be successful, but Michael Dell, in the last few years, has acquired more companies successfully than I've ever seen any CEO ever do. Almost, I'd say 70% of them are failures. 90% of the ones that he's brought on have pretty much paid off for them. So just kind of interesting. Dell may be the best acquiring company ever to actually continue to add value with the money that they do have out there. One last thing. We are watching Apple today, and you know it's been probably the big part of the movers, up about 3%, 385, something like that. What Bloomberg was reporting last night, that Apple has already ordered parts for its iTV, probably one of the reasons we're seeing a huge move out of it today. Those parts are ordered for June delivery. June delivery would set them up for a late September, October release date for their iTV, which apparently is the name that they're giving for their next product out here. So not amazing that we continue to see Apple being 99% of the movement of the NASDAQ, but there is reason for it. When we come back, we're going to try to touch on a few stocks out here, and 3,600 new employees in chip design for Apple in Austin, Texas.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, I did want to say that, yes, we've got Ken Shreve coming on between 4 and 5, and then we have Steve Rhodes coming on between 5 and 6 tonight. Why Tom's on vacation out there in the wonderful tropical area. I think he's out there doing some sailing or some boating. Well-deserved week off for him. As we look, I had a lot of charts for gold stocks that were at lows with a fairly light volume, but they hadn't tested a lot of the lows just yet. We are getting a lot of those lows tested today. One of the things I do like in gold stocks and in commodities in general is normally you see exhaustion on reversal days, and still have to watch it here. Probably going to take a little while to get along, but we certainly have volume in these gold stocks today. First one we're going to look at is ABX, and that's Barrick Gold Corporation. We are testing out the October 4th low with 12 million shares. going to come into it today with 22 million, something like that. Certainly 50% big candle, huge volume. As we look at, let's see, there was another one, Eldorado Gold, another one, Estee Lauder actually, GFI, wanted to go one farther. Let me see, here we go. Okay, Goldfields, GFI. This thing's actually back into a long-term gap that started it as the whole thing, and that gap started in late June of last year. The low back then there was 1362. It gapped up, and that was on 628. But that gap pretty much happened on 4 million shares. What we see here today is exactly that, and we've come back to this this gap level down. The energy was actually not too bad, but we've got kind of a tale of several stocks in the market. When we look at ABX, another one was AU, Asante Gold. This one giving a much bigger signal, 4.1 million shares today. It's got a gap, and that gap, let me see if I can go back just a little farther so I can pick that gap up. Maybe 2 years. That gap started back on 324, so what, about 2 years ago. And that gap, what was it, about 2.5 million shares. I would suspect that we're going to go right back down into that gap level, and that's going to be, $38.61. Looks like we'll go back and test that low. Of course, that volume is fairly high, but it does bring us back into that gap level in about $36. So look for about $1 lower on AU. Let's see if there was one more. I thought there was one more gold stock. I talked about GFI. That was pretty much it. There were a couple other stocks I wanted to get to fairly quick that looked like maybe we were topping out in the marketplace. Let me find one. Amphenol was a fairly decent one. I was hoping it would actually test a high out here. Amphenol makes a lot of connectors in electronics. Pretty good indication that the semiconductor business is truly topped out when the connector business is not doing very well. But of course, they make a lot of connectors for everything, since everything uses electronics, from automotive to if you're building a combine now for Caterpillar, everything's hooked up electronically. Everything's got a wiring harness. Everything's got a connector. Amphenol is big in putting all those connectors together. What I was looking at is the March 7th high, $59.11, 1.7 million shares, just about 1/3 that. May not even get there. Got to $58.21. You can always take a look at my newsletter free for 2 weeks. I had about 40 of these stocks in here that were giving fairly decent signals. You hang on for Ken and then Steve tonight. You all have a great and safe evening.
Great Basin Gold is a mining company engaged in